Welcome to this exclusive, unparalleled investment opportunity, shared only with a few select investors. From everyone here at Terra Equity Group, we want to thank you for your time and interest in partnering with us. To skip ahead of the line at any point for a personal overview, simply connect with our team using the information at the end of this video. Before we begin, it is important to note that the information being shared here involves investment opportunities which are regulated by and in compliance with certain SEC rules and guidelines. The information that we are sharing is based on a number of assumptions and hypothetical scenarios, and past performance does not guarantee future results. Like any investment, there are risks involved, and it is important that you are aware of those risks. In this video, we will be reviewing Terra Equity Group's approach to real estate syndications. Real estate syndication is a partnership between investors. We combine resources, experience, and capital to purchase, improve, and grow a given investment that we're partnered in. Our process is broken down into roughly 6 steps, which span this investment cycle from our starting research to our exit. Step 1 shows the research we do in these emerging markets and the relationship that we've curated over the years that in turn get our team access to many of the off-market details that the average individual investor doesn't have access to, an important factor that places us ahead of other investment partners. Step 2 shows how we then connect with qualified accredited investors like you. We can certainly partner with individuals who have fluid operational funding, but we also like to work with individual investors that are curious as to how to make their retirement accounts work for them. For these investors, we will show how you can utilize your IRAs, Roth IRAs, and 401ks, how investing from one type of account over another can forego certain tax liabilities. We'll sometimes be asked how assets outside of retirement or savings accounts can be leveraged to maximize their capital growth. Many times we've been able to identify other assets such as a line of equity on an existing property that can certainly be targeted and tapped into, particularly with interest rates right now being so low. For example, if you are getting a 6% or even an 8% return and you're paying around 3% on your line of equity, you're still comfortably making 3 to 5% on the equity you've pulled out. Step 3 points to the stage at which our team clearly defines and lays out the investment opportunity, all identified risks, all potential areas of gain, timelines that we conservatively and thoughtfully estimate, and why our team has escalated the evaluation of a target opportunity to become a qualified investment opportunity shared with our partners. Step 4 shows where our team drives forced depreciation to increase the property's value. This can include one or more of over 35 identified areas of high ROI improvements we have employed in investment projects we've successfully exited for our partners. From valet trash service and VIP parking to washer and dryer leasing options for tenants that become an extra source of income, help the bottom line, and help to improve that operating income. Step 5 highlights the point at which distributions are made to investors like yourself. An average syndicator will distribute on a quarterly basis. However, we, as a firm, believe in processing preferred distributions on a monthly basis to make sure that you, as an investor who has put your faith and money in us, are getting your distributions on a regular basis. Mailbox money. It makes you feel more comfortable as you see more regular return on your investment, but it also keeps us on our toes and performing at the higher level of standard we set for ourselves. For other investment teams, this last year has been particularly hard. However, we have remained fortunate, even in this recent crisis, and have been able to collect over 95% across all of our properties, while distributing on a monthly basis to all of our investors, without missing a single month. This push by our team to seamlessly deliver consistent preferred distribution in the middle of a once-in-a-century pandemic speaks to the thoroughness of our due diligence and the efficacy of our proprietary business systems we employ. Step 6 shows a common hold period for our investments, anywhere from 5 to 6 years, at which point we will typically exit the syndication with a 2x equity note multiple, around 15 to 17% IRR. At this point, we begin the cycle again, researching and showcasing our strategic discoveries with our partners. Because of the reliability and replicability of the syndication cycle, it is an effective hallmark business process for our team, especially right now with mortgage rates being so low in the multifamily and commercial real estate market. Here and now, it could make sense for some investors to take a line of credit on their equity, potentially earning them a few percentage points, anywhere from 3 to 5%, on top of what they pay. In fact, our team has not only seen investors do just this, some on our team have actually taken this option themselves, connecting their investment to solid returns. For certain types of assets and opportunities, we also have the ability to pass off depreciation savings to investors so they can capitalize from a taxation perspective. Just in this current 2021 tax season, we have investors that have been able to identify 6 figures worth of depreciation for their taxes using cost segregation. This is an important point to highlight. An investor putting in $100,000 is getting the $8,000 per year as a passive preferred cash return. So 5 to 6 years later, when everything is added up, that's going to turn into $200,000. And on top of that, in year 1, they're getting a nice benefit in that depreciation, close to $43,000 in real tax savings for the $100,000 investment example. Mailbox money, across the board, while you're in for the 5 to 6 years. With all that's happening in our economy, with the stimulus payments being distributed, some investors may be concerned about the devaluation of their money. If you're locking it in a vehicle such as real estate, you're hedging your risk against that devaluation. But this may also be locked up as debt equity in your home. So, your home is paid off, but what is that doing for you? Or you might have a lot of tax savings in place, but how can that generate income, mailbox money, for you? In many cases, the interest that you're seeing is negligible, and at the same time, that money is getting devalued. It's simply not taking into account the negating factor of inflation. With all that is happening, particularly now in our economy, as the country heads into more debt, the currency itself is becoming more devalued, and you need a vehicle that can preserve it. In real estate, it is getting preserved. You're appreciating it, at least, at the same rate of inflation. Our team has demonstratively increased our investment partners' earnings anywhere from 3% to 8% depending upon the market. 3% is, on the high side, our annual inflation rate. And in some booming markets like California, we're looking at growth of almost 8% annually. In this way, an investment in real estate with the systems, experience, and team behind Terra Equity Group is a hedge against capital loss in the form of inflation. To put this in perspective, there's a reason why a bank is unlikely to approve a loan based on the valuation of your business, why they're going to look at the assets that you have and give you a loan based on those. This is the resilience of real estate, the proven system of syndication that Terra Equity Group deploys, and the opportunity you have now to leverage your assets and start getting wins you may not yet have factored in, like depreciation benefits and mailbox money delivered monthly to you. This concludes our brief overview of this aspect of the investment and partnership opportunity with Terra Equity Group. However, we encourage you to continue to watch the other videos that our team has created in this series, as they each outline key strategies and approaches we employ to help assure your capital growth. If you would like to reach out to our team, simply call us at 954-987-6879 or email us at info@terraequitygroup.com. You can also visit our website at any time by heading to www.terraequitygroup.com. Again, our team at Terra Equity Group would like to thank you for your time, and we look forward to discussing this opportunity with you in more detail.